now. I want to believe you are wrapping up on your preparations. Before your exams, it's very important that we look at this together. This part of your syllabus that they ask seldomly. Sometimes they ask it, sometimes they don't. Um, so in case they want to test you on it, so it's an aspect that it's advisable that you go for because it's always one of the easiest parts of your exam. And what that part is looking at is disclosure of non-financial information in the annual report. So when, when you have an annual report has financial statements inside of it, and there are some non-financial information. Non-financial information. You already know that the financial statements are the statement of profit or loss, the statement of profit or loss and other comprehensive income, the statement of financial position, the statement of cash flows, the statement of changes in equity, and notes to the financial statement, and also your accounting policies. That is the financial statement. However, an annual report goes a little above that because there are some non-financial disclosures that you would find in an annual report. And those non-financial disclosures are, we have integrated reporting, we have sustainability reporting, we have corporate governance report, we have risk management report, and we have corporate social responsibility report. Nobody is going to ask you in the exam to prepare any of these reports. What we just want to be sure is that you understand what these reports are and why they are important to be included in the financial statement. So what I want to do tonight, within the next maybe 30, 40 minutes, is for me to tell you what these reports are, what are the advantages, and why the benefit of it to companies and also to stakeholders, and also why are some companies finding it difficult to incorporate. And we'll also quickly look at recent ICANN past questions on these areas. I mean, it's a very short discussion on this part of your syllabus. So the first part of it is integrated reporting. So you see, integrated reporting is a little beyond just we calling it non-financial disclosure. Because you will not find anywhere in an annual report a section called integrated reporting. So what integrated reporting is more about is a modern way of preparing annual reports, a modern way of preparing annual reports beyond and above what we are presently doing. So what we are presently doing, if we can call that traditional financial reporting, because it makes use of historical data and it tells stories about what has happened to the company in the past 1 year. So some set of people came together and say that, yes, it's good to tell entities about what has happened to us, about our stewardship, about the money investors have given to us, what we have done with that money is good. The way we are reporting right now is okay, but we can go beyond that. That rather than just focusing on historical data, why don't we present information about the future? Why don't we explain to the users that this is how we create value. This is how we preserve value. And as a result of our strategy, some of our value has been eroded, or some of our value has been enhanced. That is the entire story around integrated reporting. So integrated reporting is more of an approach to reporting, a new approach to reporting beyond the traditional approach. And a lot of companies are already doing this. A lot of listed companies in Nigeria, if not all of them, if you check their financial statements, they are already presenting their annual reports in an integrated format. So integrated report, from this definition I have here, it says is a concise communication about an organization's strategy, governance, performance, and prospect in the context of its external environment, lead to the creation of value in the short, medium, and long term. You see, it's not useful to cram in this definition, right? At this point, what is important for you is for you to understand the idea, the origin, or why integrated report. And the whole idea is that why should we be presenting information to users about what has happened in the past? Yes, it's okay for us to tell them this is our profit. It's okay for us to tell them this is our revenue. Yes, we can do that. Traditional financial reporting approach will not go anywhere because it's a form of stewardship, which is fine. But what integrated approach to reporting, let the user be able to link those historical information and have a feel of where we would be in the future. And the only way they can do that is for us to explain to the user how we create value. That is where strategy comes in. That is where governance comes in. That is where performance comes in. That is where external environment comes in. How we create value, how we preserve value. And have we lost value in terms of erosion? That is integrated reporting. Link the two together. Link the traditional way of reporting, link it with a future-oriented approach to reporting. Explain to let users see a link between our historical data and where we are going to be. So it's all about you telling user stories about how you create value, how you preserve the value, and how it can be eroded. So, and the only way you do that is tell them about your strategy, your governance structure, your performance, your external environment. When you're telling all of those stories, that is an integrated report. That is what integrated report is all about. Now, you see, there's a body called that drives this integrated report. They are the one that originated it. They are the one pushing it. So you need to be familiar with this name. It was there. They mentioned the last diet, their importance and how they have helped, something like that. So be familiar with International Integrated Reporting Council. It's a group of professionals all over the world. Is a global coalition of investors, regulators, standard setters, academias. I mean, all the stakeholders that matter, they form this coalition and say that we can do better than just providing historical data. let's link it. Let's tell a story that is interesting about our strategy, about our governance. How do we use all this to drive growth, to drive value? Let users say it, that this is exactly what we are doing. Tell a better story than just saying these are revenue. You go, if I say go and break it down, all of that. No. So these guys, International Integrated Reporting Council, are the ones in charge of that. Now, they have metamorphosed into a new body. So I was surprised when I saw it last diet in ICANN question. I'm still asking about International Integrated Reporting Council because they are now called Value Reporting Foundation because they merged with the Sustainability Accounting Standard Board to form Value Reporting Foundation in 2022. So it's very recent. And they are now part of the IFRS Foundation. So there is a arm under IFRS Foundation. You know, the IASB that develops IFRS, the ISSB that develops sustainability reports, and there is the Value Reporting Foundation that develops integrated reporting framework. All of them are under the umbrella of IFRS Foundation. I mean, is a part of your syllabus that we did in our first class when we just started this diet. We taught you about regulatory framework. So, I mean, back to this one. So there is actually a framework, integrated reporting framework. You just need to just know that something like that exists. Okay. Know that if there's a guide towards preparation of integrated reports. Okay, so that is the introduction to integrated reporting. So what you need to know from what I've mentioned so far is number one, integrated reporting is a new approach to reporting that tells stories, that gives users information about how an entity creates value, how they preserve that value. And I mean, if there's any erosion of that value, that is what integrated reporting is all about. And you see entity giving information about their strategy. You will see the contents and see how they tell that story on top of the historical data that we already have, which the traditional financial reporting is doing so well now. So integrated reporting is a building block on top of that. Okay, so you have the time, you can just go through this. I've already mentioned most of this. Now, one thing first about integrated reporting, one new thing is bringing is something we call fundamental concepts. And the fundamental concept in integrated reporting is looking at something we call capital. The key concept in integrated reporting is capital or stocks of value. So integrated reporting sees capital beyond what traditional financial reporting sees it as. You see, traditional financial reporting sees capital as just money, as financial capital, either the one that's brought in by the owners of the company or the one that is brought in by creditors and all of that. That's what traditional reporting sees capital as. Yes, that is capital, no doubt, but integrated reporting framework sees it beyond that. It sees capital much more than financial. It sees capital to include, yes, financial, but it says there are other capital that have enhanced value in the business, like manufactured capital, intellectual capital, human capital, social capital, and natural capital. So you need to find a way to know this because they can ask it. They have asked it before on the fundamental concept in integrated reporting. So, as you already know, financial capital is just the pool of funds is just debt, equity, grants. That's financial capital. The money you get from stakeholders, either from your investors or from the banks, the creditors, governments, the money you're able to obtain from such financing, whether debt financing and all of that, that is financial capital. Yes, that create value. Disclosing your financial capital, you're explaining how you create value, that this is the money we use to create value. But believe me, what create value for a business is much more beyond that money, that financing you've raised. So integrated reporting is saying that you need to tell us about manufactured capital. And manufactured capital are physical objects that are either produced by the company itself or by other organizations, including the government. So if an entity builds a road leading to their factory, that's a manufactured capital. Or if the government, if the organization uses a bridge, waterways, road, ports, right, to that facilitate its operational activity. Those are manufactured capital. And truth be told, without this infrastructure that are provided by organizations like governments, economic activity would not take place. Even if it takes place, it's going to be minimal because it's going to be hampered by lack of infrastructures. So yes, these guys are correct to say that disclosure of manufactured capital is you telling us that besides the money we have raised, without these infrastructures, we won't have been able to create value. Disclose is tell us about your manufactured capital. So manufactured capital, I mean, think about infrastructure majorly. It's beyond that. It could be the one that is manufactured by the company itself. Manufactured capital, they help in creating value. Not only that, it also has intellectual capital, which is the know-how of the company, their knowledge base, like their patents, their copyright, their softwares, their licenses, their systems, their procedures. Them make money, intellectual capital. That has to be properly disclosed as well. So there is also human capital, skills and competencies of the people you have within your entity, the ethical values within your entity, the risk management approach of the organization, the loyalties and motivations of the human capital you have, the people is your human capital. These go a long way to help create value. It's also part of the capital as far as integrated reporting is concerned. Also is the social and relationship capital. The relationship an entity has with stakeholders, with the communities it operates, with the government in its environment where it operates, it's a capital. I mean, if an entity has 1 million following on, let's say, LinkedIn, that's a capital. It's a huge capital. It's a social capital. So this has to be disclosed in the financial statement or in the annual report based on this integrated reporting approach. And finally is natural capital, like land, water, air, minerals. I mean, this cannot be overemphasized. It's a lot of organization needs these natural resources to create value, but they just assume that since it's free, so it's free. But in actual sense, they actually contribute to creation of value, like rainfall, like air, sunlight, forests, minerals. These are natural capital. Okay, so this can be asked in the exam. As you can see, they are quite straightforward if you really want to pick them up, you can easily just familiarize yourself with this fundamental concept of capital in integrated reporting. So this goes beyond and above what we know in traditional reporting. So when we mention capital in traditional reporting, we are talking about ordinary share capital or preferential capital and other sources of finance. That's it. But here, it evolves beyond that. And like I've mentioned before, for integrated reporting, the core principle, the guiding principle is that beyond the historical data you're giving us, tell us about how you want to be in the future. Tell us about how you create value, your strategy. So you will see the guiding principles for the data report is that it's strategic focus and future orientation. It's it provides insight into organization strategy, how they create value in the short, medium, and long term. So it focus on strategy. It's future oriented. Also, we want to see the connect, okay? The connect between data, historical data you're giving us, and how your strategy has helped you create value in over time. You need to connect. There's connectivity. You need to be able to tell a story that user can follow. Also, integrated reporting is all about telling us about your relationships with stakeholders, employees, communities, governments. What are the quality of your organization's relationship? Tell us about it. You see, in telling all of this, focus on material matters. Only disclose matters that are substantive, that will affect the organization's ability to create value, materiality, and be very concise, straight to the point, short. And of course, should be reliable, should be complete. And as soon as you start, we want to see that consistency from year on year. Okay. And if you open up any financial statements, you will see that most of them follow this approach. You will see all of these headings there right now. Before you get to the financial statement part, you see them talk about the organization overview and external environments, talk about a lot of things. You see the chairman statement, it talks about what the organization is doing, what they plan to do, their strategy, and also they talk about their external environment, what's happening, the macroeconomic environment. I mean, just pick up any financials. It's too late for that, anyways. When after your exams, you can just take your time, look at this financial statement. You will see. Also, they talk about their governance. They would talk a little about the board structure. Yes, you would see it there. The board structure will be clearly stated there. Also, you see them talking about their business model. See them talking about their business model. Also, um, you also see them talking about the risk and opportunities faced with the organization, their strategy invested heavily in machinery, we opened a new factory. They would explain that. And they will give a short highlight about their performance. You see, giving, telling us, okay, these are our revenue for this year. These are our profits. They would give a performance highlight and also outlook. And finally is how they have determined most of this information they are putting in the annual report. They would also present that to us. Okay, so that is it about integrated reporting. So why is it important? Why is it necessary? Of course, from all of these, it's good because it's improved communication, because you are communicating beyond just historical data. You're giving information about how you create value, your future orientation, your strategy, and all of that. So it improves communication between the company and the stakeholders, and it helps better decision making for investors and other stakeholders. And you're engaging more with stakeholders by giving them those information. However, also it reduces reputational risk, because by the time you're giving or providing this information, reputational risk will be reduced because they will trust you, since they are seeing how you're providing this. You have created value. That trust will be there, and it improves accountability, right? Because you're providing much more information, and also there is increased innovation. There is increased innovation. Because by the time you think about how you have created value, you will discover that, okay, maybe we can do it much, much better, because you have sat down to report how you created value. So you will do better. And it's going to improve competitiveness, because competitiveness in the sense that when you are reporting how you have created value in your annual reports, I mean, it becomes competitive. Every organization will see what you're doing and they want to do it better. And you also would have to improve. It reduces cost of capital. When you report how you are creating value, people are ready to invest more in your company at a reduced required return. At a reduced required return. It facilitates sustainability development, and also it improves long-term performance like that. So they can ask you the benefit of integrated reporting in the exam. You see them asking this often. I think it was there last night. And the disadvantage or disadvantages are, number one, you see, how do you convince senior management? How do you convince the board about integrated reporting, about let's do this? How do you convince anyone that let's provide information on how we create value? I mean, that's a major drawback. That's a major drawback. How do we convince them on how we create value? Another one is that, how do we get the resources? Because you will need more money to engage people to do this, because it's an additional task and you will need more resources. Another one is that there could be issue around legal liability, because by the time you are providing information that is food oriented, by the time you're providing information that is future oriented, and if that future comes, there could be some people that might be affected, because you might have made some projections that they would have relied on. Some people would go ahead and sue you that we relied on, you told us you were going to do this, you did not do it. You told us this is your strategy, this is how you want to create value in the future. What happened? So there could be possibility of legal liability for director. Another one is that There are already existing regulatory requirements on how reports are prepared, and they are very prescriptive. So how do you incorporate integrated reports? Because that's like a new way of, a new approach to reporting. So there are some entity that they use their own local GAAP. How do they, I mean, they have a way of preparing their traditional report and does not accommodate any additional thing. How do you then integrate or bring in integrated report? So how do you overcome a prescriptive regulatory requirement? That's a drawback. And lack of understanding of integrated reporting, I mean, a lot of people will not find it easy. A lot of people don't know what it is. It's not popular yet. And also, it exposes an entity's strategy for value creation to the public because you're exposing your strategy on how you create value. Okay, so those are drawbacks on integrated reporting. Okay, so that is the summary of that for you. So the next one is, before I move to the next one, any comments on integrated reporting before I move to sustainability reporting? This is another very short one. Okay, so sustainability reporting. The first thing is this: sustainability itself. What is the entire story all about? The whole idea behind sustainability is that an organization, individual, government, or any entity, as it were, should be able to meet their current needs without undermining the future generation's capacity to meet their need. Meet your own need without undermining the future's generation capacity to meet their own need. Don't say because you want to extract natural resources, you do it in a way that you destroy the the nearby environment. You would extract that resource in a way that that area becomes non-useful for future generation and future nourishment. Don't do that. That's not sustainable. So sustainability is saying that do whatever you have to do now without threatening the unborn generation. That's sustainability. Meet your needs. Don't undermine the future generation's ability to meet their own need. So the entirety of sustainability reporting is around these three: environmental protection, social development, and economic growth. This is it around sustainability reporting. So environmental protection is talking about when you are exacting activities on natural resources, on nature. You need to ensure that you'd always repair the damage you have caused, because these natural resources are exhaustible. They can finish. It's just like when you're cutting trees, find a way to grow them back, the ones you can grow. If you are mining natural resources, find a way to mine it, and you mine it without you damaging the environment. That's environmental protection. Protect those natural resources, repair the damages. The second one is social development is also a key principle in sustainability. And social development is looking at the people that are impacted by your activities as an organization. You need to assess how your activities has impacted on those people. When you assess it, then you will know how to help them. And that is where issues like um, reducing poverty will come up. That's where issues like equality will come up. That's where issues like livability will come up, gender equality, employee remuneration and safety, all of that are social. So social development is looking at, as an organization, what are you doing to improve your people, including your employee? What are you doing to improve your community? What are you doing to improve your environment? So social development is about the people and the community. So the issues here, you see a lot of them there. Social equity, livability, community development, human rights, labor rights, social justice, all of that are talking about social development. And the last one is economic growth. That whatever activity an organization is into, whatever economic activity you are carrying on, you need to carry it on sustainably. Don't say because you want to grow, you grow and jeopardize the ability of future generations to breathe. You operate sustainably. That's economic growth, a growth that is sustainable. And a lot of countries are already, a lot of organizations, because there are regulations around all of this, and a lot of organizations, companies are already following this. You see them reporting about sustainability heavily right now. Okay, so that's the core behind sustainability, these three. Now, one thing that is very important is you need, I mean, with these three, you can easily explain what sustainability is in the exam. And that is key. Be able to tell a story around these three and be able to tell us why is it important. This is, I can, if they would, you see there, these are the things they will ask you. Nobody will say, I prepare sustainability reports. They will ask you, why is sustainability important? How can organizations be sustainable? Something like that. What are the hindrances to preparing sustainability? You will see all those questions asked by ICANN in the past. Okay, so these are some of the importance of sustainability. Of course, like I've mentioned, end of poverty and hunger, um, a better standard of education and healthcare, gender equality, sustainable economic growth, climate change, um, assessing the impact of climate change, um, maintaining the health of the land, air, and sea, and all of that. These are some of the advantages or importance of sustainability. And no, so there are quizzes here, but I won't be able to run through that because of time. These are things I've just talked about just now. Now, so that's sustainability. Another thing you'll find in your exam is that, you see, you need to understand this story around sustainability. Everything boils down to corporate sustainability. Everything boils down to how organizations, right, operate sustainably. And sustainability is not just something you'd talk about, is is an approach to operations. In fact, it's a strategy. An organization must consciously and put effort to be sustainable. That's corporate sustainability. Is a corporate strategy that, okay, I want to add value to the environment. I want to add value to my people, and I'm going to operate in a way that is sustainable. I want to operate in a way that is sustainable. I mean, you will find that companies like, let me say, Coca-Cola, for example, now, and all these companies that use single plastic, that when you drink, you dispose. A lot of them are trying to say that, okay, this plastic that we are disposing will damage the environment, would cause, can block our drainage system because people are not disposing it properly. You see them, they will be putting trash can or where like a bin all around where you can put this thing, and they would do it in such a way that they go back and pack all of it back to their factory and recycle it. So instead of them using entirely new resources to produce new plastic, they just recycle the existing ones. These are part of the ways organizations are trying to operate sustainably. And a lot of organizations, depending on the sector, they are trying this in variety of ways, a whole lot of them. But corporate sustainability is not something new. There have been series of reports around it. Organizations that operate sustainably are doing very well, and because it will reduce costs. I mean, the example I've given you, recycling, instead of using an entirely new set of resources, we are just using an existing. I mean, it makes production faster for you as an organization. So its importance cannot be overemphasized. And I can ask you then, how can an organization be sustainable? How can they operate sustainably? This is a very important one that you need to be able to think about in case it is asked. So, two ways: looking inwardly and looking externally, right? Energy efficiency, limiting product waste and toxicity, and designing innovative products. So you're looking internally that, okay, how can we protect the environment? So reducing your emission, right? Using more green energy. That's energy efficiency, right? Not damaging the climate and all of that. So limiting product waste and toxicity. This another way. I mean, there were stories around Lagos State banning sachet and single-use plastic. I mean, it didn't take effect, but they're thinking of how they can limit product waste, right? Because these things are damaging the environment. And also, they are designing products in a way that is sustainable, innovative products. Okay. And in order to do this, they educate their employees, they reduce waste and increase energy efficiency, like what we have said. And also, they look externally by um, interacting with educating their customers on how to dispose these products properly, by only transacting with suppliers that are green focused, that are sustainable themselves, or that provide raw materials that are upgraded, that will not damage the environment. Okay. And also the community as well, and NGOs, they speak with them on how they can recycle and all of that. So these are ways, I mean, this is, if you're knowing anything around sustainability, this one is very key. How organizations can be sustainable. So how do they measure sustainability reports? That one we can easily just fly that. So this one is similar to building sustainability reporting strategy. Okay, it's similar to how organizations can be sustainable. So number one is including sustainability in all decisions, working with suppliers and customers to ensure that they use and dispose your product responsibly and engage. So this one is very similar to what we have just mentioned earlier on. So good for you. So they can ask it in similar ways for you in your exam. So another one that you would definitely find if they want to ask corporate sustainability is the benefits of corporate sustainability, which is similar to the benefits of sustainability itself. So you can give the answer to them interchangeably. So it impacts the continuous availability of resources, yeah, which makes sense. It boosts revenue because it's lower costs, right? Like, I mean, when you recycle waste, it lowers your operating cost, okay? So employees are more productive. It makes employees to be, because when they are sustainable, they would focus on things that would improve the environment. They won't be repeating the same thing. So, and it will reduce hiring expenses, because if you're operating sustainably, you would reduce a lot of waste, and and when you're building innovative products, you would discover that you don't even need so many employees, because you get a lot out of the little employees that you have. So it even attracts talent when you're operating sustainably. So it also mitigates reputational risk as an organization, because the community will trust you. I mean, this is similar to improving brand reputation. It will attract investors, and it stimulates innovation and creative process. Okay, so those are the benefits of corporate sustainability. Now, what are the sustainability drivers? What is pushing companies? What are the driver? Why are companies, and I think they have asked it some years back, why do companies want to be sustainable? Why? So a lot of them is regulatory obligation. There are regulations right now, like in Nigeria, there's sustainability reports that we have adopted the two standards issued by ISSB on sustainability reports. So you might not really find that in your ICANN exam now. So if you are going to read IFRS S1 and IFRS S2, is not in your ICANN syllabus. So the new syllabus that is coming effective next diet, it's that one is part of it already, S1 and S2. That's when we'll be teaching you how to prepare that reports. But for this diet, I mean, you don't have to bother around that. So a lot of entity operate sustainably because they want to comply with regulations. And also some wants to contribute to sustainable development, and also to manage their risk, their reputational risk. They are also seeking stakeholder support, because when you operate sustainably, stakeholders will trust you. Governments would see you as a responsible organization, and investors will make capital available to you, and you would operate efficiently. And these are drivers why organization, and I explained most of them here. So these are some of the regulations on sustainability reporting right now. SEC has its own regulation. There are SEC exchange codes. There is the SDG goals. There is the Global Reporting Initiative. There is now the ISSB. These are regulations around sustainability reporting. Okay, so and some other explanation on this point here. Okay, so basically, that's sustainability reporting, knowing, understanding what sustainability is around environmental protection, around social development and social sustainability, and also economic growth, growing in a sustainable way. And you need to understand the advantages of sustainability. And also, you need to appreciate corporate sustainability and how can an entity be, how can they operate sustainably? So by looking internally and looking externally. And also, you need to understand the drivers. Why do they want to be sustainable? And also the benefits. These are things, theoretical part that you can just find a way to annex in case I can come for it in the exams. And there are some other stories there, which is more of like a repetition of those other ones. So I think you might not really bother yourself so much around these ones. Yeah, another one you can look at is financial reports versus sustainability report. I mean, it's clear. This one is speaking of your performance in terms of numbers. This one is really talking about how sustainable you are in terms of economic protection, um, environmental protection, economic growth, and social development. So they're very different. Okay, that's sustainability reporting. So another one is corporate governance reports. So what I can will ask you here is the content of a corporate governance report. The content of a corporate governance report. So, and you need to know at least 5 or 6. If they want to ask you corporate governance, they will ask you the content of a corporate governance report. It's also part of the non-financial information. So, and the content includes details of the composition of the board members, the board of directors. What's the composition? You tell us the non-exec, the exec, and all of that. You need to tell us the rules and responsibility of the board members. What are the rules and responsibility? What's the process of making board appointments? How do you evaluate performance of the board? How do you elect and re-elect the details of directors standing for re-election? And also, if you have any board committee, you need to tell us the composition, the board committee, and also the composition of those board committee, the roles and responsibility of those committee, and how many meetings have you held as a board and the committee itself, and some other, you can just look through this, but at least know some of the contents of whatever 5 or 6 that you can know. I think you're just good to go for your exam. Another one is risk management reports. And I can ask you 2 things here. Number one is the component of a risk management report and the advantages of reporting risk, and the SEC requirements. I think they asked this on last diet already, so they can ask it this diet again. They might not ask it. They asked the SEC requirement on risk management, and also the component of risk management as well. So this SEC requires that the board of every public company must establish a risk management committee that would oversee risk. So they must have a risk management committee. So the entity must make risk management as part of their accounting policies, and they must also disclose the effect of unmitigated risk on their profits and how they are preventing those risks as an organization. So it's a requirement by SEC, and ICANN can ask the for last that it was there. So this is a requirement of SEC. And another one is the component of effective risk reporting. The component of effective risk reporting. So we have risk agenda, risk assessment, risk response, risk communication, and risk governance. So risk agenda is what are the activities that you have for your, is like your plan for risk. So what are your risk management activities? That's your risk agenda. And also is your risk assessment is like a description of the risk that you have identified as an organization. I mean, it's just a description of your risk. Then report those risks. Those risks, you need to tell us that how are you responding to each of them? And those response or those controls, are they effective and all of that? Similar to risk report is similar to risk communication. So these risk reports should be risk response, percent of risk reports. So risk response is like the controls you have in place on this risk, and risk communication is the reports that how you communicate this risk and the controls you have in place to the users. And you need to have people in charge of risk. So that's risk governance. I mean, you see a lot of companies having a risk manager or having a risk officer. There will always be somebody in charge of this risk. Okay, so CSR is also another, but sustainability reporting has already taken over CSR. But I mean, it's still something that can still come up, corporate social responsibility, which is how organizations give back to their community. So you'll find a lot of organizations doing some voluntary CSR, and you see them put it in what we call a social and environmental report, which would be replaced by a sustainability report already, but at least it still exists, right? But most organizations will report it along with them because they are talking about the same thing. So the aspect of social development, that's where CSR comes in. What you're doing to your employee, to your community, and other stakeholders. How are you giving back to them? That's CSR. So it's the same thing you would find. So it has been there. I mean, from November 2023 back, you see ICANN asking questions around these areas often, but I mean, in 2024, they only asked it in November. It wasn't so much of it there in May 2024, but last night it was there. So of course, it's something you will find there this diet. And if you look at this question in November 2023, you were asked to identify and explain various ways in which finance executives can embrace digital transformation in accounting, finance, and corporate reporting. So I think they asked something similar to this last diet as well around IT. No, no, no. The one they asked was, I think there was a system breach. Then that company was they said if you work with that company, how would you advise your clients? And that was what that one was about. So this one is talking about how would the finance executive embrace digital transformation? I mean, when it comes to digital transformation, you will know that it's all about automation. I mean, is so much about how you can improve your all areas of your um, accounting and operations with information technology. How you can improve all of those areas and using how you can incorporate enterprise resource, how you can use invoicing softwares. I mean, there are a lot of ways how you can write reports very fast without having to spend so much time on it using digitals. And a lot of, so you can look through this. I mean, these are ways organizations can adopt digital transformation in this age and time of artificial intelligence. So you might find I can asking you something around how AI, artificial intelligence, can improve the the CFO's activities. I mean, it's something similar to this about training staff, about investing in some digital technology, about knowing how to use it, about how you incorporate it in your existing system, and all of that. So these are ways in which organizations can adopt this. Another one they also asked around these areas, you see them asking you that you should discuss 4 reporting issues that should be considered by companies as a consequence of COVID-19. Okay, so maybe they might not ask this anymore because COVID-19 is gone and past, right? But I mean, we can learn a little from here. So one reporting issue is going concern and liquidity. Okay. A lot of companies almost shut down. It's clear that they need to consider they need to reassess their going concern, considering the issue that, I mean, we could not go out. A lot of organizations could not carry out their daily activities. So another one is impairment. Impairment. I mean, it was during COVID era that work from home started. So a lot of your non-financial assets that you have in your office, are they still going to be useful? Wear and tear won't have impact their ability to make more money, to operate at the rate at which they were operating before. So impairment assessment is also a key issue of both financial and your non-financial assets. A contract modification also was an issue then because a lot of contracts would not be able to continue as planned because of the disruption in economic activities and people could not move around easily. So they had to modify contracts. Also is fair value measurements, government assistance, provisions, and interim financial statements. These are all issues that was considered at that point in time. Okay, also in May, this one they can ask you this again, so you might want to give attention to this. So they say you should discuss why it is important to ensure that optimal level of disclosure is made in an annual report, and identify and explain the barriers which may exist when trying to reduce excessive disclosure. Okay, so in the exam, you see, these are ways to get marks, right? 7 marks is, I mean, you have to find a way to sit down and try to get used to this part of the exam. You can just read these materials for that and get used to it. So when you see it, it's your go-to, right? So you can easily get 5, 7 marks here than what you will get in those question one, that they ask you all the standards of this life and all of that. You are expected to adjust companies, reports, and all of that. So this one is easier for you. So how do you ensure optimal level of disclosure? Why is it important? So this is similar to saying to you, asking your advantages of those non-financial disclosures. It's like asking you advantages of sustainability reporting. It's like asking you advantages um, of risk management reports. It's similar to that. Okay. And also, in trying to reduce excessive disclosure, what are the barriers to that? What will stop you? What makes it difficult to reduce excessive disclosure? So these two questions in one that you have to carefully answer. So some of the advantages of optimal level of disclosure, while ensuring the optimal level of disclosure, is number one, you want to comply with laws. Number two, requirement of regulators. Regulators is required. Nature of the business. I mean, if you're a quoted company, you are required, right? I mean, you're considering other stakeholders, because by preparing sustainability report, for example, now, it shows that you're not just considering your investors. It's not just about money, money, money. It's beyond money, money for you. You are telling people how you're giving back, right? Or some companies aiming to provide an integrated report, not just reporting historical data, but explaining how they create value and all of that. So other importance is that it improves the company's reputation. It improves decision making by users. It shows that the company is transparent. It gives competitive edge for the companies. So also, when trying to reduce excessive disclosure, okay, what are the barriers to that? Number one is threat to future litigation may outweigh any benefits to be derived from reducing disclosure of information in the annual reports. So, because when you have been reporting something before, you now want to stop reporting it. So, the you might not want to you might just want to continue to disclose those information to avoid any form of litigation whatsoever. Your auditors might be unwilling to change, because if they are already disclosing all of this information for you, and you want to change, they might consider regulatory risk or challenges um, in that regard. And also, since you have been doing it every year, so there is the effect of previous year disclosure. If you have made that disclosure in previous year, you now want to change. So that barrier is also there staring at you in the face. So That's also a barrier. So also, repairers might also be unwilling to reduce those excessive disclosure because they want to balance year-on-year reports. So, and also when you try to reduce these disclosures, it might make the entity look less transparent, and it might also expose the company to reputational risk, and it might lose its competitive edge over its competitors. So these are the barriers to excessive disclosures. Also in May, they asked you, not really in May, last diet was, I think last diet was there, and some other diets, the content of an environmental report. So this is similar to content of a sustainability report, similar to that. So, and when you look at this content, it's just all about what the company has done for the environment, what they are doing. Like their overview of their environmental management system and sustainability strategy, their environmental policies, their environmental performance indicators like their carbon emission, their energy consumption, their water usage, their environmental risk and opportunities, their green initiatives, their innovative sustainability programs, their environmental awards and recognition, the company's progress toward achieving environmental and sustainability goals, their future plans towards environmental stewardship, the policies towards environmental issues, any impairment or deterioration since last year. I mean, what are you doing on the environment? That's all content of social and environmental report is talking about. So they can ask you that as well. Another one, which they asked in November 2022, they asked about the principles of CSR. He's just telling us, I mean, this is still similar to sustainability reporting now. So if they ask something like this again this year, all of those things around sustainability, just for you to give to them about, you talk about environmental protection, you talk about social development and economic growth, that would answer this question. And also, they also asked the content of social and environmental reports. So they asked this one almost every diet then. So in case it's repeated, be able to, I mean, if you scan through this, it's really talking about human rights. It's talking about freedom of association, forced and compulsory labor, child labor, employment conditions, avoid discrimination, environmental challenges, and all of that. So, and the content similar to what. So, I mean, you can go through this. I mean, you need to put almost the same effort as you're putting on some of those standards, the group accounts, because 15 marks, 30 marks, this is an area that it can be a sure banker for you. You have to take your time, whether over the weekend, it could be tomorrow, you can dedicate some part of tomorrow to going through all of this. And they are so straightforward. And if you can just look through it, you will see a lot of repetition. It's the same thing they are asking: dieting, diet out, dieting, diet out. So like this one in May 2022 now, like discuss the regulatory risk management provision by SEC in Nigeria and component of effective risk report. So they asked it in May 2022, and it was there again last diet. So if you had revised this, it's just for you, but last diet it was 15 marks. In May it was 20 marks. So I don't know why they reduced the mark, but whatever it is, I mean, 15, that's a whole lot, like stress-free for you and all of that. So just take your time, look through this part of the syllabus, and let's see what we can do with it. Okay, so that's that for these parts. Do we have any comments, any questions that we have?